Joining me now is G Squared Private Wealth's Victoria Greene. She's also a CNBC contributor. Victoria, I want to start off first with the mystery chart that we've shown viewers and given to listeners here over the last half hour. What exactly is this beaten up name that you think could be poised for a bounce around earnings season?
It's UnitedHealth's, right? It's the behemoth that's been beaten down for the last 12 months. And what we're looking for is this is the turnaround quarter. And we're really excited to see if they can actually execute. It's on them to finally execute on their plans. They can't just talk about it. And what we need to see is not just cost cutting, but we need to see revenue growth driven by a better medical loss ratio. That means that they price their plans correctly. They already came out with some great news on their 78% of their plans are rated 4-star or better, which makes them much more eligible for bonuses, enhanced rebates. The stock has the potential, if they execute, could see a really nice pop because you're going to see more and more investors pile in. It's a cheap stock, 15 times price earnings. I think you're going to see, if you have good news, possibly even a raise, but definitely, hey, we know how to price our insurance plans. The stock could really move.
And could be one that powers the Dow as well. It's one of the more heavily weighted members of the Dow Jones Industrial Index. Speaking of another Dow component, it's also going to be big bank earnings season coming up relatively shortly. One of the big names that you are focused on right now is a bank, but it's not JP Morgan. Which one is it?
It's Goldman Sachs. Goldman's done such a great job of going back to the Goldman Sachs of old. They're deal making, they're killing it on trading, and they're a huge beneficiary of regulatory and tax reform. And we've seen comments recently from CEOs saying this regulatory reform, it's real. It's a massive headwind. If they have a better stress test, they're a little bit more balanced, they can plan better. I expect to see, and I'm hoping to hear, a lot about increased buybacks. That'll be number one. I want to see them crush it on trading. I want to see a lower realized tax rate or anticipation of a lower realized tax rate next year. I mean, they averaged about 24% taxes last year, and so we'd love to see that tailwind there. And we really think that Goldman is executing on multiple cylinders, not only wealth management, they have that partnership with T. Rowe Price, and I'd love to hear updates on that. Is that going to drive more and more sales for their alternative investments? Is that going to push them into retail without them having to have a retail arm? Great potential there with that partnership. So I think you have some great catalysts under the hood. We also just think that deal making's heated up, trading's heated up. Those two things benefit Goldman.
All right, so that's the Goldman trade. UNH Goldman, a couple of Dow components. Your final one is not a Dow component at all, but it's gotten a lot of attention as of late because of the cryptocurrency trade. Take us through what you think is going to be a pop on earnings.
Right. I love Coinbase right now. I think it's a great play to be in because it has so much exposure to cryptocurrencies and Bitcoin. Its correlation with Bitcoin is very, very high. When Bitcoin trades higher, its R squared over the last year is 0.62%, so that's saying it's very highly positively correlated. We've all seen what's happened with Bitcoin. Crypto is becoming more and more mainstream, but it's beyond just the retail traders. It's the stable coin story. So for us, Coinbase has multiple verticals. They've got their subscription revenue. They've got their trading revenue. We know trading heats up when Bitcoin price moves like it has. And so I look at that. That's a huge catalyst for a win. They also are rolling out the Amex crypto Coinbase One credit card. To me, that's fascinating. They're pushing into that. So I'd love to hear more details on that. So if they crush it on trading revenue, increase subscription revenue, and what's coming down the pipe with Amex, stable coins, and they're embracing the fact finance is modernizing, finance is trading, and a lot of the modernization of how payments are being processed is going through Coinbase and Coinbase's platforms. So I think it's a place you want to be.